The real estate market has changed forever. If you only watch one real estate video over the next 5 years, it better be this one, because what's happening to the housing market right now is wild. I mean, if you somehow got trapped in a cave in 2020, fought off a colony of bats, and crawled back into the sunlight today, you would probably ask, what on earth happened to the real estate market? I don't even recognize it anymore. Buckle up, because I'm about to show you the permanent changes shaping your wealth and future, whether you're a landlord, a renter, or just someone hoping to afford a house before retirement, and also where the real deals are. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, and see my work in the USA Today. Between March 2020 and June 2022, just a little over 2 years, home prices didn't just climb, they exploded 43%. Rents? Similar story. Why exactly did this happen, and why were cars wrapped around the block just waiting for one open house then? Well, first it was ultra low mortgage rates. Second, it was a work from home frenzy. And third, it was stimulus checks that made everyone feel rich until they weren't. So suddenly, a high earner in New York City or LA could pack their MacBook and move to zero income tax Dallas or Tampa. Builders couldn't keep up. Inventory just vanished. Look at how grotesquely badly the American housing supply bottomed out in early 2022. I mean, the genuine housing supply crash was on. Supply was about as elastic as a brick wall. It didn't move because you can't just snap your fingers and have millions of homes built, but you can snap your fingers and suddenly desire a home if you can afford it. But then, almost just as quickly, the brakes slammed on. Later in 2022, people stopped moving. Mortgage rates soared. Inflation spiked, and soon your boss gave you a return to office mandate. Home sales volume quickly tanked. It was a 180-degree turn that fast. Realtors just gone out of work. Mortgage loan companies out of business. Even real estate-related businesses like furniture stores were gone. Now, by 2024 and 2025, home prices mostly leveled off and have flattened out, but apartment building values, they dropped by as much as 30% because of interest rate resets on their shorter term loans, and they still haven't recovered. Wild. A lot of apartment investor groups imploded when they couldn't make those higher mortgage payments that doubled overnight in a lot of cases. Bankruptcy. Meanwhile, the cost to buy a starter home has soared from a $78K necessary income needed in 2020 to $117K today. That's a 50% increase in just 5 years. Astounding. And here that is broken down by state. This is the median household income recommended for buying a 3-bedroom home, and this is why the term forever renter, it's not just a meme anymore, it's reality. And I've got more on all this and where we're headed next. Hit that like button if you're getting value already. It seriously helps this reach more people like you. And if you love smart money and real estate breakdowns, subscribe. Mortgage rates have now hovered in a range between 6 and 7.5 for 20 months. Home prices, they're up just about 3% year over year. Now, back in January 2025, when Trump returned to the White House, remember what happened. Markets jumped and optimism abounded. There was a Trump bump because he's deemed as a business-friendly president, but then, bam, tariffs dropped like an elbow from the top rope, and housing demand cooled some more. Why? Well, let's be real. No one shops for a house when they think that their job could be on the line. And when tariff uncertainty looms for a business, well, that business sure isn't going to launch some aggressive new hiring plan either. So after those 5 years, what now? How do you actually play this market? Well, here's what I would do if I were you. I would consider that rental demand is up, way up, because of that low affordability. So therefore, own rental property. Look at the plummeting home ownership rate and think about what this means. If you can't own, then you've got to rent unless you're going to be homeless. The homeless numbers are increasing. This is why you want to own rental property, rental demand. We've also got more inventory this year than last, available inventory of homes. That means more motivated sellers, especially those shiny build-to-rent homes. And though we're still undersupplied nationally, America has about 30% more available inventory today than last year at this time. But look at this astounding recovery contrast, that recovery of available housing supply today compared to pre-pandemic times. Here you can see just which states have recovered the most. There is still so little available supply in the northeastern quadrant of the nation. This is not so much about where people are moving. What this is about uneven levels of new construction. They're hardly building anything in the Northeast and Midwest. A lot of that is due to high regulation. Just 10 of the 50 states are now above pre-pandemic active housing inventory levels. Arizona, Colorado, Florida, Idaho, Hawaii, Oregon, Tennessee, Texas, Utah, and Washington. All above pre-pandemic housing inventory levels. But those that aren't recovering, well, this is why it can feel almost impossible to buy a home in places like New Jersey, Connecticut, and Illinois. Oppositely, if you want to own or rent in Austin, Texas, or the southwest part of Florida, sheesh, you can scoop up an apartment faster than you can get a burger at a Wendy's drive-thru. So this is where the deals are. If you want a property, sellers are willing to give you concessions in places like Texas, Florida, and elsewhere. In fact, many providers that we work with in these areas with new supply, they will buy down your mortgage rate to 5%. Yes, 5% today. Another provider we work with will give you $9,800 cash post-closing, and on your rental property, they'll give you a year of free property management. And if rates dip, you'll refi. That is an if though. You can't count on rates dropping. And if you buy from one of these build-to-rent builders that buy down your rate to near 5%, well, then you probably won't need a refi. Be in the income property game. You'll position yourself to play both sides of the market. If we get low inflation, that's when you're more likely to see rates drop. And if we get high inflation, rates will stay higher, but that makes your debt erode away faster. So real estate investors can play both sides. The three smartest plays right now in this market are build-to-rent properties, the BRRRR strategy, that's buy, renovate, rent, refinance, and repeat, and apartment buildings are an opportunity because their values have been beaten down so badly. Here's what you need to know. America right now has not just a high number of renter households, but actually an all-time record high number of renter households right now. This growing horde of renters, it's yet another superlative in this market. And then here's the growth rate. Though the US population is growing by less than 1% per year, the renter population is growing twice as fast, and that's why rent concessions are vanishing and landlords are back in control. Rent growth is poised to heat up. So here we go. Here's the overall market report card now. Sellers, they only get a C+. They're losing power to buyers. Owner-occupant buyers, they get a C because affordability is still down, but they can get more concessions from sellers. First-time home buyers, they get a total F, a complete fail. I mean, they're the ones so badly crushed by that horrible affordability of higher rates and prices. Single-family landlords, a B+. There's a lot of demand from those that want to own a house but have to rent yours from you instead. Single-family landlords have got high occupancy, but they're not totally crushing it because of higher expenses. Apartment landlords, they're almost failing. They get a D. They're hurting, especially in southern cities where this glut of apartment building took place the past few years. They've got stagnant rent increases and even high vacancy in apartments. And then renters, their grade is a B. their situation is pretty stable. In a lot of cities, it's cheaper for them to rent than own, and the B grade, that's probably going to fall down once rent increases kick in. The bottom line is that it's been some of the craziest 5 years in real estate history. Today, home prices are stable, owner-occupant buyers are pulling back, and renters are flooding the market. In the long run, demographic demand will stay strong. I've discussed that in other videos. Inflation isn't going away, and that means real estate investors win. The market isn't waiting, neither should you. We can help you. Like I said, in this market, we work with providers right now that are willing to buy down your interest rate to 5% on a brand new build rental property. Others giving you a $9,800 post-close credit. And at greinvestmentcoach.com, that's where our totally free investment coaching will learn your goals and help you find the exact property addresses, if it's right for you, to make this a reality and create another income stream for yourself with a property management solution so that you don't have to be a landlord. You can book a time there now. Own entry-level property. So it's a 20% down payment on typically a 200 to 400K single-family income property, and rent that to a forever renter that can't be a first-time home buyer because they can't afford it. That's the opportunity. Watch this about how today's homes are actually cheaper than they were 100 years ago, or here where we debate if home prices could really fall all the way back to 2020 levels.